Hey guys, hope you're doing well. This is Vinod. In this video, I'm going to speak about two things. One is the arbitrage. This is going to be arbitrage part 2. 2 is on the spreads. Alright, let's go. First, in the arbitrage 1, we said that Nifty June future was 50 to 60 points lower than the spot. Now, just observe that Nifty future price is at 10,085 and the spot price is 10,061. It's at a premium, that is the future price is higher than the spot price by 24 points. That means the discount 60 points has gone away and 24 points premium has increased, right? So that means totally 60 to 24, 60 plus 24, that's about 84 points. There is a gain in this arbitrage opportunity per unit, right? So those who had taken up this arbitrage opportunity, they have made, and such arbitrage opportunities arise many a times, but we need not worry about the direction of the market. That is the very sweet opportunities what we have in arbitrage, because we need not analyze about the market whether it is going to go up or whether it is going to go down. Even if market would have gone down and the difference between future and spot has got adjusted, still the arbitragers had made money. Now the spreads, great. Today the market is going up every day, right? And we are in the beginning of the month, and beginning of the month the option premiums, those who are trading in options, you very well know that the premiums are very high. So even if market goes up, the call premium may not go up very much higher. The reason is the premiums are too high, and then the premiums become more risky to the traders. So what we do is we create a spread. How do we create a spread? But this is not like arbitrage. You need to know that market is going to go up or going to go down. That 2-3 parameters, if you learn and understand, you will be able to know what sort of spread you can create. First point is that market is going to go up, most of us know. Please refer to our Nifty PCR video where we suggested Nifty will go up. That is the first point. Second point is Reliance. Reliance is a front runner, right? And it has got a lot of weightage on Nifty. And there are a lot of positive news on Reliance. And even when you technically study the Reliance chart and also study the option chain of Reliance, you are sure that Reliance will go up. But if it goes up slow and late, then the premiums will decay. So if you buy only the call, the premiums may not go up much, but the risk will be higher because the premiums are very expensive, because we are in the beginning of the month, right? So what is the alternative we have? The alternative we have is creating a spread. So what we did is we bought Reliance 1520 call, and since we were expecting Reliance will go to 1600 for a period of time with the intermediate resistance around 1550 and 1560 zones, we have created a spread. What this spread is called is bull call spread, right? So we bought 1520 call and sold 1600 call. We have also shared the Reliance levels time and again over the social media and other areas about the levels of Reliance. Today when Reliance touched around 1550 and 1560 zones, that was a supply zone. So what we did is we squared off the position and backed in around 6,500 rupees, almost 6,100 rupees, right? So this is a great trade because the risk was lower for us because we have created a spread. The risk when we have taken the position was hardly 10,000 rupees, right? And the margins for spreads also have been reduced from 1st June to enable traders to use these opportunities better, and we as traders need to design such strategies to minimize our risk and maximize our profit. So we need to sit down, find out the levels, and then see what sort of spread we can create, what is the risk, what is the reward. Options are where you can define the risk clearly. Whereas in futures, even if you define the risk, the execution part may not be perfect or market may not allow you to exit. Whereas in the spreads, even if nothing allows, your risk is already defined and that much will be the maximum risk. So that's a great opportunity for traders we are having in the stock market. So if we learn all these things about options, about technicals, about fundamentals, about selection of stocks, we can get great ideas. And what more, we are also providing a great news for you, that 20% off on the program which we have announced starting on 20th June, only weekend batches where you can learn in leisure time, online classes, and the offer is completing on 5th June. What more you have in this? You're going to have Indian charts as well as US charts. Please remember, the US charts are going to be the reality in the next few months. We are going to get access to trade in US markets also. So if you learn the technicals, if you learn the options, if you learn the fundamentals, irrespective of whether it is Indian market, whether it is US markets, you can trade anywhere. And this is an extensive program of almost 45 hours with 6 hours of live market. So do rush in and enroll to this particular program and learn this over a weekend and enrich yourself and be successful and consistent. Shortly, we are also going to share with you the profitability, the consistency our students have been making over a period of time, and you can see how the learnings have been decent enough. And you can also see our testimonials of students who have been consistently trading and making money, not only in stocks but also in Bank Nifty. So this is Vinod signing off. Happy trading. Thank you.